Assalamu alaikum friends. Welcome to question number 2 of SBR. So this question is from your latest revision kit of SBR, because if you are going by the older version of SBR revision kit, that is till June 2021, this will not be your question number 2. Your question number 2 will be something else. So don't worry, I will arrange the numbers accordingly. It's not yet still updated, the numbering of the questions. But for section A, I have done all the questions. There are only 2 questions which have been added to your latest revision kit, that is question number 1 and 2. That is from your latest past paper. Okay, so after this question number 2, I can directly go to ethics question, because I've done all the other questions from the revision kit. You can get it under the SBR revision kit solution playlist. So this question, as you can see, is from March 2020. That's March 2020, the latest paper. And this is section A, that is group accounting questions, worth 30 marks. Okay, so let's see. As you can see that you have some background and you have the functional currency. So the moment you see functional currency, you know it has something to do with exchange rate, right? That means this is a question on exchange rate. And then we have accusation of crochet, then we have the rates, accusation of another company, then we have impairment of bond. Okay, so impairment of bond is dealt under which standard? IFRS 9. Okay, you can just annotate while going through. Okay, so the best way to do questions in SBR, any question, just skim through the subheadings without reading, and first start with reading the requirements, and then we'll go back to the case study and start reading it. As you can see, it's for 30 marks. So the first question is you have to draft an explanatory note to the directors of Humming addressing the following. What is it? Part A, how the functional currency of the crochet should be determined, for 5 marks. So this is about functional currency. Okay, how it will be determined. Remember, the question says how it will be determined. You don't have to do any calculation here. It's explanation. Part B is for 4 marks. Okay, first part of B, how the customer contracts. There's some customer contract there. As you can read the case study, you will come to know how this should be accounted for in the consolidated financial statement, which are presented in dollar. Okay, because we don't know what is the functional currency of crochet yet. First we have to determine that, and based on whatever the functional currency, we have to account for the remaining parts also, B, C, and all those things, for 4 marks. Second is a calculation of goodwill. You see, now it's a calculation on accusation in Gromans. Okay, and how it will be accounted for in the consolidated. So one is calculation and the other one is how it will be accounted for. This question you must have seen it multiple times. It's repetitive, right? Every time the question is how it should be accounted for in the consolidated financial statements, how it should be accounted for. So this is always repeated. Okay, so this sets a tone that this is how your questions will be like in section A, especially related to consolidated financial statements. Okay, at 31st December 2004, after translation, after you have translated, okay, you have to calculate goodwill and how it will be accounted for. Include a brief explanation and calculation. Explanation and calculation. Whenever they say explanation and calculation, remember 2 things you have to include: explanation as well as calculation of how impairment and exchange difference on goodwill. One is relating to impairment, both explanation and calculation. The other one is exchange difference on goodwill, both explanation and calculation. That the difference will impact on the consolidated financial statements. Okay, how this will have an impact, for 6 marks. Going to part C, how Cueva should be accounted for in the consolidated financial statements. So this is about Cueva, another company. This is about crochet. So part A and part B has nothing to do with Cueva company. Okay, it is only dealing with one particular company, and C is another company. For 4 marks, you have to say how it will be accounted for. It could be an associate, it could be a subsidiary, it could be a joint venture, it could be anything. A financial instrument, you have to, accordingly, you have to say how you have to account for it. Part D, calculation and discussion. Again, calculation and a discussion of how the bond should be accounted for in the financial statements. Remember, there are 2 days that they have given. One is 31st December 2003, the other one is 31st December 2004. Sometimes they will give you 1 year, sometimes they will give you 2 years, sometimes they will give you 3 years also. So you have to know at a particular time how it will be um, measured, including any impairment losses, because there has been an impairment in bond. Okay, what is it? As a financial instrument. What standard does it come onto? These are the questions you need to answer yourself. Okay, nowhere in the question they will tell you, okay, this is the standard. Under this standard, no. You have to first know, identify the correct standard. Okay, and if you see the majority of the mark is for part D, please pay attention to this 11 marks. But if you go through the marking scheme, you will come to know the examiner's comment at the marking scheme. Candidates got the fewest mark in part D. They just briefly wrote and they just ignored the question altogether, putting themselves at a higher risk because it's out of 30, it's 11 marks. So you can understand. Okay, if you see the others are like 5 marks, 4 marks, 6 marks, but this one is 11 marks. Okay, which is the IFRS 9. So now you know the format of the requirements. So accordingly you can read also. You can decide that are you going to read the everything all together, or you are going to read only those part which is relevant for a particular requirement, answer again, come and read, then answer. Usually if you ask me what strategy do I apply the second strategy. That is, read only those what is relevant for example, there are how many requirements are here? A, B, C, D. There are 4 requirements. So for my first requirement, whatever the portion is relevant, I will read and answer my first requirement. Second, also I will do like that. For second, I will come back again, read, and then I will. For C, I will read whatever is relevant for C, then I will answer. For D, whatever is relevant, I will read for D. The reason why I am doing is, even though it looks like that is very time consuming, why not read everything together? The reason is, even if I read everything together, okay, again when I come back to that, by the time I come back to the last part, I will forget what I read. Again I have to read, so I'm wasting my time there again. You understanding how I'm wasting my time? Again I have to read anyway, because because at the first time when I'm reading, I will be reading it at very high pace, very at high speed, just to satisfy myself that I have read, okay, in the time given. So if you have a very good memory, sharp memory, you read the whole case study and remember each and everything, then it's okay. Okay, I don't mind. But usually the second approach is better. For example, I know for part A and part B, I don't need Cueva, I don't need financial instrument part. The bond part, I don't need to read. Okay, so I can just read the company, the first company, that is the accusation of this crotchet, and how the functional currency will be determined. To see how the functional currency will be determined, I don't even need this accusation of this one also. Okay, if you can see here, for the part A is just how functional currency will be determined. For that, I only need to read this paragraph. This paragraph, if I read, is enough. This whole paragraph, if I read, is enough. I can answer part A. Okay, for part B, yes, I need to read the accusation to know the information, to calculate goodwill and all. So now but always start with the background. Okay, never skip that background, is very important. So Humming is a parent company. Okay, and Humming uses dollar. Parent uses dollar as its functional currency. It's very important that you should know what is the functional currency of the parent. Why? Because sometimes subsidiary uses that as their functional currency, depending on some certain factors. If it's present, yes, otherwise no. Okay, Humming acquired 80% of Crochet. Okay, that means it's a subsidiary. Okay, so you can even make somewhere Humming have acquired 80% of Crochet. Okay, so he's a subsidiary. Okay, and his functional currency is what? Dollar. Now we have to determine for Crochet what is his functional currency, the subsidiary's functional currency. This question is very common. You can expect it. You can expect this type of questions. What will be the functional currency? Okay, of the subsidiary. They will not ask you the other way around of the parent. No, that they will never ask you, because subsidiary, the functional currency is more or less based on the parent company's uh, currency, the functional currency. Not always, but most of the time. And they have acquired 100% of Cueva on the same date. 100% means again it's a subsidiary. That means there is no Ncaa. No Ncaa is there. 100%. Again, is a subsidiary. So there are two subsidiaries. Now, functional currency. I only have to answer part A for, I think, 5 marks. So only I will read this paragraph. This from here only you will get the information. Don't just write because parent is having a dollar as his functional currency. Crochet also should have, the subsidiary also should have the dollar as a functional currency. No, not always. You have to read this. So let us read. The head office of the subsidiary is located in a country which uses dinar. Okay, head office is using dinar as its main currency. However, its staff are located in a variety of other locations. Half of the employees are paid in dinars. These are very important. You need to highlight it. And other half are paid in the currency of grommet. So this is very confusing because half in dinar, half in grommet, right? Head office in dinar. They have a high degree of autonomy. High degree of autonomy means what? Subsidiary is having freedom over its parent. Okay, they are not so much of dependent on the parent. They are not relying on finance also from the parent, nor for the sales. Nor the sales to the parent company makes a significant proportion of their income. Okay, so all this gives you a hint that the parents' functional currency should not be the subsidiaries' functional currency in this case, because number one, high degree of autonomy, they are not relying on finance. Higher proportion of sale is not to the parent company. Okay, but anyway, let's read more. All of its sales and purchases are invoiced in grommet, and therefore they raise most of the finance also in grommet. Cash receipts are retained in both grommet and dinar. Okay, and Crochet does not own a dollar bank account. So because he does not own a dollar bank account, looks like that dollar cannot be a functional currency, but we'll see. Crochet is required by law to pay tax on his profits in dinar. Okay, to pay tax. So looking at this, if you see the requirement, it is for 5 marks. Remember, at the end, you have to give a conclusion. Whether dinar, whether dollar, whether grommet. Out of these three, what is the functional currency of Crochet and why? You cannot just leave it like this. One you have to select, and based on that only all your calculations will get affected. So now if you see, okay, the part A, okay, so here this is for part A. So whenever you're starting like this, always make sure that you write a proper subheading like this. Even though the examiner knows that you are talking about functional currency, you still have to write a subheading, even if it's for 4 marks, even if it's for 5 marks, even if it's for 10 marks. Marks does not matter, you have to write a subheading. Okay, and because now you're typing, so you can bold it out also, bold your subheading, so it's clear that this is a subheading, functional currency. Okay, so directly you can go by tutorial note. This is for your understanding what they are doing at each step. This is just an explanation, you don't have to write in your answer, it's not required for you. Okay, so they told, if you see the tutorial note, you first have to start what? Definition of functional currency. This is your starting point. You should know what is your starting point, what you're going to write in the middle, and what are you going to conclude, how are you going to conclude. This skill has to be there for all your questions. Okay, so you first start with the definition of functional currency, because the question asked to determine the functional currency. So from there, define functional currency, and also how you determine. There are factors that you have studied in your textbook, now you apply it here. This is very knowledge based question, it's from your textbook also, you can apply, but you have to apply to this company whatever you have studied. Okay, so as I told you, subsidiary could have the same functional currency as the parent if subsidiary is very much dependent on the parent, but in this case it does not look so, so it's hard to say. Okay, so start with the answer. If you see, this whole thing is the answer. Okay, so the main thing I will highlight it for you from the answer. Don't try to copy paste the exact same answer, don't try to memorize answers. At P level, it is not worth it. It's not worth it at any level, but especially at P level, you cannot do that because the answers are very lengthy. Okay. Okay. Let's say at least for this, you at least somehow tried. What about the 11 mark question? What about 20 marks question? What about those? You cannot. Even if you memorize, also next time they might change the question for you. So it's not at all helpful. Don't memorize. Understand the logic behind it. If you understood something, if you have a very sound understanding of something, it's very easy for you to apply also in any scenario given. Okay. So first definition. What is the definition? Functional currency is the currency of the primary economic environment in which the entity operates. Okay. Primary economic environment in which the entity operates. For example, if someone is operating in US, most probably the functional currency will be dollar. If someone is operating in some other country, that currency will be decided based on what is the environment. Primary economic environment. This because this is multinational company. For multinational, there are so many currencies. But what is their primary economic environment? Primary. Based on that will be your functional currency. Okay. So because this is a foreign accusation, that's why it's a bit harder to decide what is the functional currency. So with a foreign accusation, you have to consider whether you have to adopt the same functional currency as the parent or not. This is first thing you have to check. Okay. So first definition. Okay, I will write the things for you here. First definition of FC. FC means functional currency. Number two. Just give me 1 minute. Okay. So number two, you determine same functional currency as parent or not. First you have to determine this. Once you have determined it's the same functional currency as the parent, then stop there. No need to look for other factor. Then that is only the functional currency. But most of your questions, what I have seen, the examiner usually asks is that the functional currency of the parent is not the same as the subsidiary. The reason why they ask you this type of question is to give you more points so that you come up with more points how to determine, right? Otherwise otherwise this question would have been 2 or 3 marks, but this is for 5 marks means they will ask you more, right? Simple common sense. So third, follow this step. If you follow this step for functional currency, this is to determine functional currency. Question is determine FC, functional currency. Okay, this steps you have to follow when you get this question. It could be any question in any way, but ultimately the question is determine functional currency. Maybe the company might be different, country might be different, some scenario, some things might be different, but ultimately this is the step, okay, that you have to follow. Okay, if not parent functional currency, then discuss other factors. Third step. And finally, conclude which currency. So these are the 4 steps you have to follow. Okay. And that's the 4th step exactly they did, if you see. So first they defined. So definition part is over. Second, determine same function currency as parent. That is also done. It's not the same. Why you have to say why it's not the same. That also you have to say. Okay. Because they are largely independent, number one, and they are not reliant for sales or finance. If you see, most of the sales is not to the Humming, and they are not dependent for finance also. They have high autonomy. That means largely independent of the parent. So because of this reason, it looks like that this is not. And also another thing is that they do not have a dollar bank account. Okay. So it could be concluded dollar is not their functional currency. Maybe you can make this sentence shorter and write in your own words. You don't have to exactly copy paste their answer. Come on, this answer is published answer. It is for your learning purpose. In the main exam, actual exam, under the time pressure, you are not expected to write this much of answer. You cannot write. You time yourself and see how much time you're taking to write this much of answer. You cannot do that. So don't worry about it. Don't panic. Writing more or less is not the thing. Writing the to the point main thing is very important. If you write in 5 lines and finish it, still you will get the 5 marks. Okay. So because if you are asking why, how do I know? The reason is me. I am the biggest example of it. I always write to the point. I don't have a habit of taking extra papers and writing too much. Whatever is relevant I write, right? I usually have that habit of writing short, and to the point, you know. So one thing is out. First of all, eliminate whatever the things is not there. So dollar is out. It's not dollar. Now there's a confusion between Dina and Gromit. So start your second paragraph with that. Out of this two, what it should be. So in determining functional currency, this is from your knowledge only. Textbook is there. Okay. In determining the functional currency, mention the name of the company. Don't write general answers. The company should consider, which company? Crochet company should consider the currency which mainly influences the sale price. Which currency mainly from which they get their sale price of the good. They have to see that currency. Or the currency which mainly influences is labor and other cost. This is from your textbook. Simple, pure knowledge. If majority of your sale price is in a particular currency or a labor or other cost, that currency is you take as a functional currency. So this is likely to be the currency which goods are invoiced in. If your goods are invoiced in a particular currency, then that currency could be a functional currency. And also for the cost also. Both for invoice and the cost. Okay. What about the location? Remember they have given you the location, the head office that they are using dinner. So in this case, location of the entity's head office is irrelevant. You have to write, if you write this also, you will get points. Okay. Just because something is irrelevant does not mean you just skip it completely and you don't even mention about it. Because they told dinar. So it is irrelevant. Where head office could be anything. Okay, it could be anywhere. It could use any currency. That currency does not determine your functional currency. Okay. Now, but for crochet, yes. If you see number of transactions in dinar, okay, and tax has to be paid in dinar. Okay. Even though if you see number of transactions are in dinars, tax also you have to pay in dinar, but vast majority of the transactions are in grommet. If you see, even your sales and your purchases are invoiced in grommet. Approximately half of the staff is being paid in grommet, half in dinar. Finance is also raised in grommet. So you see everything is grommet. Dinar is also there, yes, but more than dinar, it's grommet. Sale is in grommet, cost is in grommet, you are paying employee in grommet, half of them are you are paying in grommet, finance you are raising in grommet. So all this suggests that grommet should be the functional currency of crochet. You have to write this. Don't forget to mention this line at the end. This is your conclusion. So you talked about first point, second point, third point also. Discussed the factor. Okay. From the case only you took from this paragraph only the points. Okay. Finance is in grommet, sale is in grommet, cost purchase are in grommet. Okay. All these points, if you see the answer is purely from this paragraph only. Even though it's pure knowledge, but it's from this paragraph only you are using. Okay. So that's how you will get your 5 points. Now coming to the second. For second, we need to read this paragraph. Just okay, we are done with this. Now I know that I don't need this paragraph. Okay, the beauty of approaching the second method, second way that I have told you is that you know that this part is now eliminated. So you don't have to worry about it, it's now out. I exactly know that from here to here, I have to read only this much of information is important. Another thing is if I know that from point A to point B, only this much is information I need for my particular requirement, I will only focus here. My focus will be only on this area. I will not look out throughout the case study running from up to down, finding for the information where it is, where it is. Okay, and this is not only for SBR. Any ACCA paper you pick up, you can use this technique. Okay, I have been using this technique. This is my success technique, right? I often don't tell my friends, but I'm sharing this with you guys that this is my success techniques. This saves time and I know where I'm looking the information for, where I need to focus. This I've used in SBL, SBR, ATX and my FM. Okay. Now, accusation. So accusation of this one, if you have been doing multiple questions, many questions, you know, in your mind, in your subconscious mind, you know, okay, They will mention about NCI, fair value of net assets, the consideration, maybe some additional consideration, and in this case they will give you the exchange rate dollar also, maybe the impairment of goodwill also they will give you. So now I know what is the format, what things they could. But if you are attempting this question for the first time, let's say you have never attempted any questions on group accounting section A, 30 marks, you will not know this. That's why repetition of questions is very important. Not the same question 100 times, but different questions in the same area. Okay, this is the reason why we always suggest you, we always tell you that please do questions on revision kit. This makes you faster, this makes you know the format, the pattern. You can subconsciously pick it, even if I don't read line by line. Okay, I can pick out that these things will be there in this paragraph because I've been doing these questions. How many questions I've done under group accounting? Maybe 30, 20, 30 questions. Okay, so you also have to build up that speed and that courage. Now coming back to the question accusation, they paid cash of 24 million for 80% holding. That is your cash consideration. This is in dollar if you see, but your functional currency is grommet. This is the reason why part A is very important for your rest of your answer question, because everything whatever you do you have to present it in grommet. Okay, for crochet, the subsidy. For the parent, they have paid in 24 million. Okay, and they measure NCI at fair value. I've told you. So fair value of NCI also they will give you, which is 6 million. All this are in dollar. Net assets also. Okay, they have some net assets domestically and overseas. So because of that, they have given you two net assets. One in overseas, one is in this one. So fair value of net assets at acquisition were determined in their local currency. So that means fair value of some asset are in dinar, some are in grommet. So the total fair value of net asset that is in grommet is this much, 43 million grommet. And the fair value of net asset that is in dinar, it is 50 million dinar. You have to change this into dollar first. Okay, the 50 million dinar part. Excluded this fair, okay, excluded from this fair values are several contracts with customers. Several contracts with customers. The reason, because of this wordings, many students incorrectly mentioned IFRS 15. That is your revenue from contract with customer, which is incorrect. Okay, this is the reason you have to read the whole paragraph rather than just reading one line and deciding, okay, this is IFRS 15. No. So in this fair value above 43 million, 50 million, this fair value thing is not there. You need to adjust it. You need to add it there. When you're calculating goodwill, this will have an impact. Okay. So this contractual relationship prohibits the customers of Russia from obtaining service from any of the main competitors. That means there's a relationships that because of this contract, you cannot obtain any service from the competitors of credit. It prohibits the customers of the company. And fair value, they have given 15 million grommet. Fair value of this, which you have to add. And on 31st December 2004, goodwill is impaired by 30%. Now they have given the exchange rate. They didn't give you any average rate. They give you the opening and the closing. Okay, they have given you in three: dollar to grommet, dollar to dinar, and dinar to grommet. From 1st of January 2004, this is the opening balance. This is the closing balance. Okay, acquisition of Cueva is not needed for my part B. Okay, first part of B is what? How this customer contract should be accounted, and second is calculate goodwill and how it should be accounted for with all the exchange differences and the impairment and everything. That is for 6 months. So both we can do using the whatever I have read. So first, there are two things. First is customer contract. We'll deal with this for 4 marks. Okay, don't write too much of detail. It's only for 4 marks. Don't waste time. Okay. So correct standard is IFRS 3 in this case, not IFRS 15. Okay, because this is under accusation. Whenever under accusation, if you're buying anything, it comes as a under IFRS 3. Okay, so according to IFRS 3, what should you do? The investees net assets, you have to value them at fair value. This you have to write first, number one. Okay, so to be identifiable, the customer contract, they must be capable of being used or sold separately, or they must arise from some legal or contractual right. Okay, so reliable estimate of its fair value is also necessary. That means you have to estimate the fair value of this as a separate asset. apart from the goodwill. Okay. So even though you have recognized this contract in the separate financial statements or not, in the consolidated financial statements, you have to recognize it at fair value separately, this contract as an asset. Okay. Why? Because the contract provides them with a legal right to prevent their customer. Remember, they told they were prohibiting their customers from using the services of the competitor, right? So because of that, they have a legal right to prevent their customers. Okay, so because of that, a fair value has to be obtained for this, a reliable fair value. So because of this, this contract should be recognized as a separate intangible asset. At the end, don't forget to give this conclusion. It's an intangible asset. You cannot, it's a contract. It's giving you some advantages. Okay? Some legal right. So because of that, you are having some cash flow. You are having right on that asset. You are receiving cash flow, but it's intangible. Can you touch it? Can you touch the contract? No, it's intangible asset. Okay? So this net asset should be recognized at fair value. We know that at the acquisition. Okay? And they have already given you the amount that this is 15 million grommet. Okay? And you have to translate this to dollar. Why? Because parent company's functional currency matters a lot in the consolidation, right? Parent company. So this 50 million you have to convert to dollar. Dollar is the functional currency of the parent of Humming. And what is the spot exchange rate? Which rate? Opening at 1st of Jan 2004. This rate, dollar to grommet. So it is 8. So divide it by 8 to get it in dollar. 1 to 8. So 15 million divided by 8 will be this in dollar. Okay, write it in proper term, dollar and the million. Okay, initially it will be recognized like that. Okay, now remember, don't forget the subsequent measurement. Initial recognition often students write, but what about once you recognize intangible asset initially, that intangible asset you have to amortize it also. Most of the students forget the amortization part. Okay, so don't make sure that you don't forget. So this needs to be determined so that you know what is their unexpired useful life and amortize over this. So you have to amortize it over this period. Amortize for the amortization purpose you need it. Okay. The question asks for the accounting treatment in 31st December 2004. Remember, you always have to, that's why date is very important in SBR. What date are they telling you? 31st December 2004. Here also 31st December 2004. 31st December 2004 means initial and subsequent measurement both you need at this date. So that means you have to amortize it also. Okay. And this amortization expense, where will it go? It will go in the profit and loss account only. But you have to translate at average rate of exchange, remember, because it's an expense. All the profit and loss statement items, you have to translate at average rate, right? But in this case, you have not been given the average rate, so you can use the closing rate. What is the closing rate? The 7 grommet. This one. You see, 7, the closing rate for the amortization purpose. Okay. So you are using the closing date. Make sure that you mention these things: average date, closing date, opening date. What rate you translate, always mention it. So carrying amount of the contract, you retranslate at the closing rate. And with the corresponding exchange gain that is recognized. Where do you recognize the exchange gain? When you translate and all in other comprehensive income. Mention the place also, very important. How do you know it's an exchange gain or loss? Very easy. Earlier you were translating the 15 into 8. 15 divided by 8 will be something smaller. But 15 divided by 7 will be something bigger. So from here to here, the intangible asset, the value, the carrying amount increased. That's why it's an exchange gain. That's how you know it. Some things you just have to know without calculating also. If you want, you can calculate and say amount will increase. Now we are coming to the second thing, which is calculation of goodwill. So make sure that you write calculation of goodwill. Okay. So calculation of goodwill, impairment of goodwill, normally in SBR, you translate them at average rate. Why? Because impairment is also an expense which goes on profit and loss account. Average rate. But in this case, average rate is not provided. See how you have to be very, you have to use your common sense sometimes. That when average rate is not there, don't break your head. Where is the average rate? Where is the average rate? Or some students try to be too smart. What they do is they add the opening and the closing and divide by 2 and find the average rate. No, that's not what you should do. If average rate is not given, use the closing rate. Okay, for the impairment also. So goodwill at this date is this much. Calculated as follows. Always once you calculate, make one line, keep one line space and write the amount of goodwill because the requirement asked you for that. Calculation you can show after that word. Okay, one line only you have to leave and show the calculation. Okay, how 8.2? It is this 8.2. Okay, then show the calculation. So when you are showing, remember, first you have to show in the grommet millions. Why? This is the functional currency of the subsidiary. Then the rate, then the dollar million because at the parent company. Everything you have to bring it in dollar. Whatever the functional currency the parent is using. Because whenever you are making the consolidated financial statements, it is from the parent. So 3 columns you have to make. Actually 4 columns for the description also you need. And then 3 columns. This you can do in Excel maybe. This part. Okay, Excel will save your time also. So consideration has been 24 million, right? It was in dollar, but now it was in dollar. When you are converting dollar to grommet, multiply by 8. From grommet to dollar dividing, now you multiply by 8, okay? Because it was $1 equal to 8 grommet. So for 24 million, cross multiply, right? To find this one. So 24 into 8. First, everything in grommet. Even though it's in dollar, you must be asking me a question that it's already the consideration is in dollar, 24 million. Then why are we converting back to grommet and then again to dollar? The reason is because goodwill, okay, the rule says goodwill you have to calculate in the functional currency of the subsidiary first. And then you have to convert using the rate to the dollar. Okay. Because even though you say that okay, this is in dollar, this is in dollar, what about net asset? This is in grommet, no? So something is in dollar, something is in grommet. You cannot keep it. So rather, first everything take it at grommet, then use the rate and change it into dollar for goodwill calculation. So Ncaa also they have given it the fabulous 6 million, same rate, 8 opening rate only. Okay, and net asset separate working is there. Whenever a working you have to use, don't use the working in the main table. Keep some space and use it later separately, like this working one. So net asset, they told you there are 2 net asset. One is in dinar, the other one is in grommet already. So net asset that is in grommet is 43 million. Okay, plus this 15 million. What is this 15 million? This contract, that intangible asset, right? That net asset you have to now add it. It was not there. It was excluded from this 43 million. Now there was another which is 50 million dinar. They told you. 50 million dinar. So dinar you have to first convert it into grommet because this 43 million is in grommet, 15 million is in grommet. This 50 million is in dinar. You cannot add that 50 million until you convert it into grommet first. So if you convert it into grommet, it will be 50 into 2, 100. So 43 plus 15 plus 100 will be 158 minus 158. I'm sure you know the formula to calculate goodwill, right? Consideration plus Ncaa minus net asset. Hence 82. How 15 to 2? Just simply the exchange rate. Okay, make sure that you have the exchange rate in front of you. Okay, this one, opening one. Yet we didn't go to the closing. We'll touch the closing when we touch the impairment part. Impairment of goodwill by 30%. So 1 dinar into 2 grommets. So that means to find it in 1 grommet will be half of the dinar. That's why you divide it by 2. Sorry, multiply by 2. 1 dinar and 2 grommet means to find it in grommet just multiply by 2, which is 100. Okay, now so goodwill when you are taking 8, okay, remember 8 is the opening, 7 is the closing. Okay, every time I don't have to keep going there. So 82 divided by 8 is 10.25 goodwill. Impairment also. Impairment, remember, impairment, we normally use average rate, but here average rate is not given, so we are using the closing rate, which is 7. So 24.6, you are taking 30% on this 82. 24.6, then 7, and you get the impairment. Exchange gain is a gain. You have to write whether it's exchange loss or a gain. How do you understand it? It's a balancing figure. So for time being, keep a space and find the goodwill at the 31st December 2004. This is 1st of Jan 2004. Date is very important. Okay, you have to calculate for both the days the goodwill. So when you come here, it is simply the goodwill, opening goodwill minus impairment, 57.4. This you have to translate using the closing rate, the 31st December 2004, and you get 8.2. So how do you calculate? Just take this column, 10.25 minus 3.51. How much is it? It is 6.74. Correct? And this one is 8.2. So from here to here, what is the balance? If you see there's an increase in the goodwill at the year end, that means it's exchange gain here. Some exchange gain you must have recognized here. So the difference is 1.46 and it's a gain because it's positive sign, you can see. You add 1.46, then only you get 8.2. Okay. So that's the reason. That's the goodwill. Now, they told calculation and explanation. Calculation part is over. Now you have to explain the accounting treatment. Okay. Once you are able to calculate correctly, explanation is nothing. Okay, just like you're putting an icing, it's like an icing on the cake. Okay, you have to recognize where the income will go, where the expenses will be recognized. Okay, those things you have to recognize for both exchange rate gain and the goodwill. The requirement specifically mentioned it. So goodwill, initially you will recognize at the spot exchange rate of this, mention the exchange rate also. And so this is the amount, 10.25 million. From the calculation above you get it. You see here 10.25. This figures only you are explaining. All this figure 10.25, 3.51, 1.46 and 8.2. So I'm not going to refer every time. Scroll up and go and refer the figure. Okay. Impairment loss. So one by one, keep space and explain. First, initial goodwill. Second, the impairment loss is this much. This will be expensed where? Consolidated statement of profit and loss. Make sure that you write this word consolidated everywhere in your question number 1. Okay. Consolidated statement. Where does it go? Impairment of profit. Statement of profit and loss. Don't write other components of income yet. Impairment loss will go under profit and loss only. Third. So this is first, this is second, this is third. Goodwill will be retranslated using the closing date. Now earlier it was opening rate. Now again you retranslate using closing rate. And this is the rate. Rate change from 1:8 to 1:7. So this will be the exchange gain because of that. And exchange gain will go under the comprehensive income. Okay. Then fourth is, this is the stage which most of the candidates they forget to do. They stop till after here. What about the division between the Ncaa and the parent? You have to do that for both impairment and the exchange gain. So because make sure that you know that Ncaa is measured at partial or goodwill. In this case it is fair value Ncaa. So in this case that means you have to apportion it 80-20, both the impairment and the exchange gain. Okay, remember you don't have to show, you just have to explain. That's it. If you write it in words, that's enough. Okay, now we are coming to part 6, Cueva company. Now you have to go and read. So I know only this much is important, because in your mind having less information you always feel more secure. You always feel that I will save time because I have less to read, and because of this you will perform better also. Okay, so basically you are doing two things. One, you are saving time, the other one you are just playing with the psychology. That's the reason I have told you that that go by the second strategy if you feel like. But if you think read everything and then that's okay. Now, so accusation, here they have purchased 100%, there is no Ncaa. Okay, and but they bought this with the intention to sell, and they did not wish to have an active involvement also. These points are very important. You have to make sure that you make a reference to this in your answer. Okay, they begin to seek a buyer. They felt the sale will be completed by this, that means within 12 months. But okay, and also the buyer was also there, was located in this date within the 12 months. But due to some unforeseen legal dispute, that means they couldn't predict, they couldn't foresee that this is going to happen. Okay, a contingent liability was disclosed, and also because of that unforeseen event, sale was not finalized until 31st December 2004. That means within 12 months, sale didn't take place. It will now take place in the early 2005. It is expected to take place. So this is with standard. It is IFRS 5. Correctly, you have to identify the standard. If you correctly identify the standard, very easy for you to write the answer. So you see how long did it take me to read it, and then maybe 1 or 2 minutes, 1 minute maybe. So clever. Remember, this is IFRS 5. That means you have to have some criteria. You have to write about the criteria whether it is classified as held for sale or not. Okay. Before that, you have to identify, define what is this disposal group. So this asset or a disposal group, they should be classified as held for sale if the carrying amount will be primarily recovered through a sales transaction. Okay. For this, IFRS 5 states. So IFRS 5, what does it state? All this four you need to write in your answer. What is it? Asset must be available for immediate sale. Immediately should be available for sale, whatever the condition it is in, and it must be highly probable in the sale. The sale has to be expected to be complete within 12 months. It must be actively marketed, the sale. You just cannot sit with that asset thinking that okay, the buyer will come and buy it. No, you have to actively look for the buyer at reasonable price. Price should not be too high or low. And also management must be committed to plan for that sale. Okay, and also changes to that plan should be very unlikely. Okay, that okay, it should be likely that the plan will be there, that it will be sold. So these four conditions are there, then you can say it is classified as held for sale. In this case, the sale, did it take place within 12 months of acquisition? No, it is going expected to be taking place early 2005. But there is an exception in this condition. Why? In this case, it is permitted. Why? Because sale is highly probable. Correct? Everything was done. But this delay was because of some event which was not in the control of the management. And also it's unforeseen. You couldn't foresee this event. So because of this is an exception. Okay? If you want to know the exception, you have to see IFRS 5 to know the details. Sale is expected early in 2005. Legal dispute was unforeseen. So in this case, this exception seems applicable in this case. Sometimes exception does not work. You might say no, in this case it's not, but in this case it is working. Okay, because legal dispute is something you cannot foresee, and also sale is expected to be expected in early 2005. So in this case, they should be classified as disposal group held for sale, Cueva. And because they should be classified as held for sale, how should you measure it? Initially, how should you measure it? Fair value less cost to sell. This also you have to write. Very important. IFRS 5, always fair value less cost to sell. And if that decreases, but later if your fair value less cost to sell decreases, then it will be taken under profit and loss as an expense. Okay. Now you have to say whether. So conditions. Okay. Up till this we were talking about the condition that the exception worked. Now we are talking about the from the case study whether this will be a discontinued operation or not. Okay. So the 4 bullet points that we mentioned here, we are making sure that we cover all those here in our case study. So in this case, management is immediately committed to sell. They did not have any active involvement in the beginning. Okay. So this, looking at this, you can say yes, this subsidiary you have acquired it only to sell. So in accordance with IFRS 5, how should you present Cueva? As a discontinued operation. And even the earnings for this will have to be disclosed separately in the consolidated statement of profit and loss. This is your answer. Okay. Now, D. So part D is relating to financial instruments. Okay, we need to read it. It's for 11 marks. Careful attention is to be paid here. So if you see here, impairment of bonds. 31st December 2003, they purchased 10 million 5% bond. 10 million is the amount of the bond, 5% as the coupon interest, you can see. At par value, the bonds are repayable on 31st December 2006, 456, and effective rate of interest is 8%. Okay, they will give you all this amount of the bond, the coupon rate, when the bonds are repayable, what is the effective rate of interest. Always, whenever bond is there, these things they will always give you. And the business model. What is the business model? To collect the contractual cash flows over the life of the asset. Very important is the business model. Are they selling it after keeping it for the short term, or they are keeping it at the end of the till the end of the bond? Are they collecting cash flows? It's very important. Based on that only you will decide how are you going to measure your bond. So this, in this case, contractual cash flow over the life of the asset. You're not selling it, you will keep it. And at this date, bonds are considered to be low risk. Remember, this is impairment of bond. So that's why you have to talk about the credit risk. It is low. So as a result, 12th month expected credit loss are expected to be 10,000. They have already calculated. You don't have to calculate. They will calculate and give it to you. Okay. Now, here you have to calculate for both the dates, 31st December 2003 and 31st December 2004. Okay. So we'll read 31st December 2004 also and finish it off so that we don't have to come back here. 31st December 2004, they paid a coupon interest, but at this date, the risk increased significantly. Okay, the present value is this much for the cash shortfalls. Cash shortfalls means because credit risk increase means you are not going to cover the entire cash. There will be some cash shortfalls. So that present value they have given you. And they will give you the probability also. The probability of default is 3%. Okay, this is for 31st December 2005. For 31st December 2006, this is the present value of the cash shortfall and the probability of default is 5%. It increased. And this also increased very significantly from 462,963 to 6,858,710. Even the probability of default increased. Okay. This is a new type of question, but I've not done a question like this with you. So let's do. So when you have to present for two separate dates, make sure that those two separate days are your subheadings. So first one is 31st December 2003. Okay. So first, you need the accounting treatment of bond number 1. Number 2 is impairment. Impairment is different, bond is different. First, look at the accounting treatment of bond itself. How will you decide it? Looking at the business model. In this case, it is to collect the contractual cash flow over the life of the asset. So the bond should be measured at amortized cost. Very important. First you have to identify this before you jump to the impairment. Don't jump to the impairment. You need to identify how this bond will be measured. Is it at amortized cost? Is it at fair value through profit and loss? Is it fair value to other comprehensive income? Out of these three, which is it? Amortized cost. Why? Contractual cash flow is you're not selling, you are keeping it. You are receiving the cash flow till the end of the asset. That's why amortized cost. If you forgot it, you have to go back to my IFRS 9 videos, revisit, and then come back and do this question. Okay, until you don't feel confident without looking your IFRS 9 rules and attempting question like this, that means you're not okay with IFRS 9. You should feel confident without looking at the rules every time and then doing a question. Initially you can take help, but not after a certain time. You should get used to it. Okay, so the financial asset should be recognized at fair value. It's a financial asset, right? You're having it, from that you're receiving cash flow, so it's a financial asset. What is the meaning of asset? You're having something, from that you're receiving cash. In this case also, bond is your financial asset because having that bond you're receiving cash. So it's a financial asset and this should be recognized at fair value plus fee if applicable. In this case they didn't say talked about any fee. Okay, so already they have given the amount of the bond, which is 10 million. Okay, so 10 million should be the amount. You can write 10 million or 10 and the 6 zeros. It's up to you. Now IFRS 9 is a very big standard. It has debt instruments, equity instruments, hedging methods, all those things, derivatives, embedded derivatives. You don't have to touch all those. You only have to touch the part relating to the impairment of your financial asset. Only that part. What does it say about the credit risk? The 12-month expected credit risk, the lifetime expected credit risk. Only those two things you have to touch. Other than that, you don't have to touch your IFRS 9. Okay? To calculate they require to calculate expected credit losses. If you're having any investment in debt instruments, Investment you can have in any instruments. It could be equity instruments like shares in a company, or debt instruments like bond in this case. First, you need to identify whether it's equity instruments or debt instruments that you're having investment in. This is a debt instrument. Okay. So debt instruments, we know debt. When you're taking debt, what happens? Credit risk will come there, no? With debt, the borrowers might default on their payment. So it's a risk. That's why expected credit losses. You don't prepare this expected credit losses for your investments in debt instruments or equity instruments. It's not important, needed. Only for your debt instruments like bonds and all, or loan. So expected credit losses. Okay. For investment in debt instruments, you have to calculate that are measured at amortized cost or fair value through other comprehensive income. In this case, you have already measured your bond at amortized cost. So for that also, it can be impaired. You have to expect, you have to calculate expected credit loss, or if it was at fair value through other comprehensive income, also you have to calculate expected credit losses. But if it was fair value through profit and loss, you don't have to calculate expected credit losses. Please understand this. This is from your IFRS 9. Okay, I'm going a little bit slow on this part because I want you to understand and grasp this very clearly. Okay, because students struggle on this in this part. And make sure that you write in different paragraphs also. Okay, importance of paragraph, never underestimate it. Okay, in ACCA. No. So when you acquire, initially the bond was at low risk. It was not credit impaired. What does it mean? You only have to calculate the 12-month expected credit losses. Whenever risk is low, 12-month expected credit losses. They have already given you it, right? What is the 12-month expected credit losses? You can even define it. It is defined as the portion of the lifetime. That means out of your lifetime expected credit losses, only a portion of it goes for your 12-month expected credit losses. Okay. That means 12-month expected credit losses means what? You are expecting that this will be your credit losses. That means this will be a shortfall in the within the next 12 months. That is the meaning of 12-month expected credit losses. That means the borrower are going to default on their payment in the next 12 months. That is the meaning of 12-month expected credit losses. It is within 12 months. That's why it is known as 12-month expected credit losses. If it's more than 12 months, it is known as lifetime expected credit losses. Understood? So now calculation comes. So you have to recognize an allowance of 10,000 for 12 months because they have already given you the 12-month expected credit loss is 10,000. That means recognize an allowance of that amount at this date. Please mention the date. Even though, yes, subheading you wrote 31st December 2003, again right here. That at this date, recognize allowance. And how do you, where do you recognize it? Profit and loss. Expense, profit and loss. And a separate allowance is created. So this allowance is netted off against that 10 million bond. That 10 million bond value will be deducted by this 10,000. That means why net it off? Because you will not receive this 10 million bond anymore now. Because of that 12-month expected credit losses, that 10,000 you have to deduct from this 10 million in the statement of financial position. Okay, so now find the carrying amount. Carrying amount of the bond is simply 10 million minus 10,000. So it will be 9.99 million in the statement of financial position at 31st December 2003. Write the date and write the place. Whether it is statement of financial position or statement of profit and loss. Carrying amount of the bond goes in the statement of financial position. The expense really, the 10,000 goes to profit and loss. Okay. Now we are coming to 31st December 2004. At this date, okay, interest income. Because whenever debt you are having bond and all, you are also receiving cash flow, the principal amount as well as the interest income. Interest also you are receiving on that. So how do you calculate that interest income? Based on that effective rate 8%, not the 5%. 5% is the coupon rate. You have to pay the interest. But interest income is the effective rate of 8%. And this will be also charged to profit and loss. And this interest income you have to add to the carrying amount of the financial asset. Because this also you will receive. And how do you increase it? Is it on this 9.99? No. It is on the carrying amount of the financial asset, which is 10 million, the gross. This gross. Mention the word gross carrying amount. Okay. there are 3 stages to the impairment. Stage 1, stage 2, stage 3. This is at stage 1. That's why you're taking on the carrying amount of the, that's why you're calculating on the gross carrying amount. If it reaches stage 3, then it is on the net carrying amount. Okay, that is in your IFRS 9, you will see. So that means 10 million, out of that 8% you take. So that means it will be 800,000, the interest income. Coupon will be how much? Amount of the bond 10 million and 5%. So coupon interest is 5%. This will be deducted from the carrying amount of the bond. Remember, effective interest rate you add with the bond, coupon interest you deduct. Effective interest add, coupon interest deduct from the bond. Okay, always remember it. So now find the carrying amount of the bond. It will be 10.3 million. How? From 10 million, add the effective interest minus the coupon. Before any impairment issue. This is before any impairment. This is the carrying amount of the bond. Now you take the impairment into account. Okay. So at 31st December 2004, they told that there's a significant increase in the credit risk. Okay. That means lifetime expected credit losses. You have to make an allowance for this. Okay. So the definition also they have given you. I'm not changing the definition as it is. I'm saying that means whatever the expected credit losses, or you can say cash shortfalls. Expected credit losses the same as cash shortfalls only, right? Which results from all possible default events over the expected life of the bond. Over the expected life of the bond means what? When did they say? They told that the bond will be repayable on 31st December 2006. So until that, they were expecting cash shortfalls. That's why it is a lifetime expected credit losses. They didn't say 12 month or only this month or only this year. No. Until that date, there's a credit loss only. Cash shortfall. Okay. So allowance now when you have to calculate, it is equal to the present value. Calculation obviously you will be doing later, but first explain what you are doing. It will be equal to the present value as weighted by the probability of default. That means multiply the probability of default with the present value of the expected loss. And that's how you get the allowance. For the 12-month expected credit losses, which one was for 31st December 2006, this 10,000 was already given to you, this allowance. So you didn't have to calculate it, but for the lifetime, you have to calculate it, how much it will be. Okay, to calculate, they have given you also the cash shortfall and the probability. So this is how you calculate. And when you're discounting it, how do you discount the default losses? Using the 8%, the original effective rate of interest, not the coupon rate 5% or the 3%, the probability, and no. Effective rate of interest only you use to discount back to 31st December, because this you discount to 31st December 2004 using 8%. Okay, but that they didn't show here. But anyway, cash flow they have given you. You see it has increased, and 3% it was 5%. So multiply, find the present value of default, add together 356,825. Okay, so now remember on 31st, this is the time scale. 31st December 2003, they were already having an allowance of how much? 10,000. Now if you see, it has increased to 356,825, right? It increased, right? So how much the difference? It is 346,825. Just find the difference. You will find that means your expense increased by this much. So when you're recording the expense in the profit and loss, you're not writing this amount. You're only writing the difference. How much it increased from 10,000. But the net carrying amount of the bond in the statement of financial position will change for 31st December 2004. How much? Earlier the bond was 10 million, 10.3 million minus this. For that, you take this whole amount, 356,825 from 10.3 million, because 10.3 million was your carrying amount. You see this carrying amount of the bond. From there you deduct. Okay. Because even though that 12-month expected credit losses was there of 10,000, but because it is at stage 1 impairment, you don't take it here in the carrying amount, right? You just take the effective interest, add and minus coupon interest and get 10.3 million. From that you deduct this loss. Okay, 356,825 and get this amount. That means at the end it will be 9,943,175. It reduced from 10 million because of impairment. That means you will receive less now, less cash flow. So that's it for question number 2, Hummings. Now let us go to the marking scheme and the examiner comment, because it's very important. It's a new paper, new question, and so if you see, the first question was five marks, 2 marks just to describe the autonomy from parent, whether they have or not, 3 marks for the determination of functional currency. Part B was regarding that intangible asset. So first you have to find the identifiable criteria and recognition, whether it suits as an intangible asset or not. And then intangible asset, then you have to amortize it also. So 1 mark only for amortization, but 3 marks for identifying. Then goodwill. So goodwill calculation is 4 marks. Discussion of impairment and exchange 1 mark. And that split between shareholders, Ncaa and shareholders, just 1 mark. Okay, you just have to explain. Part C, non-current assets held for sale. So discussion of assets held for sale criteria. The bullet points is just 2 marks. And application this to the Cueva is 2 marks. Coming to part D, where majority of your marks are, if you see 1, 2, 1, 2. So amortized cost identification. That means to identify that the bond, initially you have to recognize it at amortized cost, because the contractual cash flow you are holding it till the end of the asset. 1 mark. 1 mark for that. If you don't mention that in your answer and directly go to the impairment, 1 mark you will lose. 12th month discussion, 12th month calculation. Discussion is 2 marks if you say it's more than the calculation, because calculation is what, only 10,000. That's already given, but you need to discuss. Amortized cost calculation, 1 mark. Now you calculate. Earlier you just identified. That means the carrying amount you get 10.3 million. Explain lifetime credit loss and calculate. So here 3 marks. More marks will be there for lifetime expected credit losses. We saw that, right? So now let us go to the examiner's comment. Okay. So part A, okay, I will summarize this for you and make it shorter for you. I'm not going to write line by line and make you bored and waste your time. Okay, so part A is good. Most candidates were able to find out the factor that determines the functional currency. Okay, so most of the time it's good. Part A, relating to functional currency. Part B, okay. Part B, weaker answers, they focused on IFRS 15, as I told you, incorrect standard. Rather, it should be IFRS 3, business combination. Okay. Other than that, other things were okay. Okay. That students know that they have to calculate goodwill first at their local currency and then at the dollar. Okay. And also that fair value adjustment, that intangible asset, also they included it with goodwill because it's an asset. So that was also done. But only few candidates achieved full mark. The reason is they ignored the impairment and the exchange differences on the consolidated financial statements, the impact of both the impairment and the exchange differences. They ignored this part. Part C was also good enough. The IFRS 5, non-current assets held for sale. Okay, and because it's mostly knowledge, so it's easy also. Part D is my concern. Part D. It is the shortest answer. But the reality should be that it should be the longest answer, because 11 marks compared to the other parts. Why is the shortest answer? Have you ever thought, why do I write something? For some I write too much, and for some I write short. You need to identify this. You need to review yourself. When you're practicing also, why for some part I write too much and for some part I write too less. The reason is, if you are writing too less for something, that means first of all you are not confident enough about that subject and you don't know much about it. That's why you don't know what to write. And if you are writing too much, on the other hand, is also not good. You are wasting time. Okay, that means you don't know how to out of your answer, you don't know what is important, what is not important, how to differentiate, and what to write and what not to write. That's why you're writing everything, whatever you know about the topic. That is also not good. Both the extremes are not good. Okay, you must have studied 80%. Out of 80%, only 10% only is asked from you. So you need to know, you should know how to apply only those 10% from what you have studied out of the 80% portion of the syllabus. Okay, but writing long, more dangerous is writing short answer than the long answer. Okay, because long answer, at least you will get something out of it, but short answer, that means you didn't write most of the things, so there is no chance that you are going to get any mark. Okay, Especially it comes for IFRS 9 standards like IFRS 9, IFRS 2. These are pretty tough standard. Not tough, but complex and lengthy standard. If you're not having specific guidance on how to tackle questions on IFRS 9, you will face a lot of trouble. Okay. Only few candidates have a clear understanding of the expected value. That means multiply the probability of default by the cash outflow. Okay. So there's a general lack of confidence in this area. Okay, and the second year treatment was also well less explained. First year treatment is 10,000. It's very easy, 12-month expected credit loss. But the second year is the hard part. That was well, less well explained. Okay. Then the net increase in this allowance was also not presented, rarely presented, rarely. Okay. The meaning, see, rarely presented means what? It means still there are some candidates who have a very good understanding on this topic. That's why they told rarely. That means maybe one or two candidates must have shown. Okay, so now you need to think what are the strategies that they are doing? What is that 1 or 2% of the population are doing that I'm not doing? Why are they able to understand the situation? Why am I not able to understand the situation? Otherwise, the examiner would have wrote that no one got this answer. No one was able to present it this way. They told rarely. That means some students did present it in the correct way. Okay. So if they could, you also can. You should always come to that category. That if they can understand this complex nature, they can do it. I also can do it. Maybe I need some practice, some guidance. Right? With that, with time, I will be okay. So you need to have this confidence, this spirit you need to have in yourself. If you think, oh, it's very hard, I will not be able to do it, others are very intelligent, I'm not, then you will never learn. Okay. So make sure that you, from today, change your attitude and just go for it. So explanations tended to be too brief. Okay. They didn't apply to the scenario. And focus also is tended to be on calculations. Mostly they focus on calculation and they forgot about the discussion. But requirements specifically told calculation and discussion. Okay. Weaker answers did one more thing, the mistake. Discounted cash flow. Table of discounted cash flow is not needed. And some even recommended that there should be a fair value through profit and loss. From where did this came? Right? You need to give a thought, and which illustrated lack of preparation in this area. So please prepare well. The reason I'm telling you is this, because out of you, most of you I know personally, and whom I don't know also, I know that you are going to repeat SBR in December, right? Time is very short, and you probably know your mistakes by now, and I guarantee you that most of you are struggling in this area by now. So please pay attention to this little difficult areas more, so that you can secure your chances of passing in the December session, right? So till then, best of luck and see you in the next video.